Hello and welcome to this CNBC Africa Special. I'm Chris Bishop, the founding editor of Forbes Africa. Now we're here at Melrose Arch at the headquarters of Lonmin, the world's third largest platinum miner. Now these are very difficult days for Lonmin. On the 19th of November, it'll be going to shareholders for a multi-million-dollar bailout. And we're here to speak to the man in the hot seat, CEO Ben Magara.
Chris, it is indeed a watershed moment for Lonmin. We have had pre-marketing to our investors. We announced with our prospectus, with our annual results on the 9th, and we have a rights issue that is fully underwritten by our three banks, and therefore that gave us some optimism about going forward. So we're really hopeful that our shareholders will vote positive on the 19th of November. But it is indeed a watershed moment for Lonmin.
But many of your shareholders have already voted with their feet. They've walked away. Your share price has dropped something like 45% in the last day or so, and nearly, or more than 80% in the last year. Surely that should worry you as the CEO.
I guess shareholders will take their choices and they'll make their decisions. The reality is the underlying business is really a great business. The assets are good. The infrastructure is good. The people are working hard. You look at the cost reduction programs that we embarked on this year. We have dropped our costs from over 10,800 rands per PGM ounce. It's now sitting at 10,400. The work and the underlying assets are great assets. I would vote yes, and I would put my money, and I'm going to put my money in Lonmin. But indeed, we're asking shareholders again, and it is unfortunate we have to do that. But from the assets I see and the fundamentals of long-term PGM attractiveness, I believe this is the best. It is in the best interest of our shareholders to do what we're doing.
But you must accept surely though that a lot of the shareholders are very cynical about it. They're saying this is the third bailout, is it not, in the last 6 years? Are we not going to be doing the same thing in a year's time?
I think for decades I have to accept that we have not always done it well at Lonmin. And for the industry. I think the industry could be a lot more disciplined. Given the demand-supply challenges we're facing, we should be taking a lot more high-cost production. And Lonmin has taken out 100,000 platinum ounces per year. And I think the industry needs to do a lot more of that. And we've not done enough. The industry has wasted a lot of capital. And one has to accept that. And Lonmin is no exception. And there are a few examples I could give you about the things we have not done as well. And we should acknowledge that. But I can tell you the efforts we have been putting in the last few years to rebuild bridges with our employees, to work hard with our communities, and the kind of projects we've put in place. Our employees now have an employee profit sharing scheme in place. The Bapo community, who are our host communities, now are one of the top 20 shareholders at Lonmin. We've worked very hard to make sure we can create stability and sustainability for the industry, for the country, and for ourselves. But indeed, there are things we have not done as well in the past.
Well, in a nutshell, what are those things?
I could reflect on quite a bit, but in the boom times around 2004, 2005, Lonmin went and bought barren ground in the northern province there, around the Platte Reef, a property called Akanani. Akanani was bought for almost $1 billion. Today in our books, it's worth zero. So that $1 billion went down the drain. Lonmin embarked on a serious mechanization program in this hard rock, narrow and tabular deposit, which no one could cut effectively today. We wasted a further $1 billion in that process of trying to mechanize. To try to reverse all those challenges has needed even more money to do that. So I think one has to accept, but we have moved on and we are turning a new leaf. We're repositioning this Lonmin, and I'm saying I could articulate the things we are doing, but it's really quite important right now that the shareholders see that.
Why did the company waste so much money on Akanani and mechanization? I mean, surely, what was the board thinking at the time?
I could speak forever and I could highlight what it is and what it is not. I think that what is reality right now is it's water under the bridge. And we have acknowledged and learned our lessons from it. We have reversed the whole mechanization mistakes that we made then. We are now back to fully conventional mining. In this year, with our unit costs, we have become the best labor-intensive conventional miner in South Africa in the Platinum Reef. So we really have done the right things. I could explain what went wrong and why they did it wrong, actually my energy would be better off into how do we rebuild this company, which is what we're doing.
But all this is going to come around to the shareholders. They're going to look at Lonmin and say, look, you've wasted billions in the past and you're asking us for more money now. Surely it's going to make it more difficult for you in London.
It is difficult. It is a challenge. But I think one has to say, looking ahead, what is Lonmin doing? Every stakeholder has to take some short-term sacrifice for long-term value that I am convinced will come. But what is that long-term sacrifice that everybody is making? Our employees are having to sacrifice 6,000 jobs. Our social projects, we are having some public partnerships to make sure that they can continue, but we can't spend as much as we've always been spending. And indeed, our investors, we're coming to them again with the ball, because actually, if they look ahead, the value opportunities, and what have we done differently, Chris, might also be helpful. You know, people think Marikana is one mine. Marikana is 11 mines. It's 11 shafts. There are great shafts in there that are contributing well in terms of profits. There are shafts that are making a loss. The conscious decision we have made in developing the plan we now have, that we are sharing with investors to believe in what we are doing, is we're closing the expensive shafts and running the new shafts. We have brought in 4 what we call generation 2 shafts, which are running at peak with low cost. They have lives in excess of 20 years, and we really believe we have a plan that they can support.
So going back to the shareholders meeting, what would be the best result for you and the company, say on the 19th?
On the 19th, I'm saying to the shareholders, all the 10 lending banks have given us $370 million on the premise that the rights issue succeeds. We have requested $400 million of a rights issue, which is fully underwritten by our banks. So I'm hopeful that the shareholders will vote positive, and once that has happened on the 19th, by the time mid-December comes, they will then go and follow their rights, and I'm encouraging that everybody follows their rights. Then if they all follow their rights, it means no one feels the pinch of the discount. And if that happens, by mid-December, we'll then have money in the company, and the company can continue on a sustainable footing. And if by that time, the billions of shares that people are talking about will then be reconsolidated to make sure the share price reflects what is possibly realistic in the market.
But some of the analysts I've been talking to still believe the shareholders are going to be very reluctant in London to go along with your idea.
I think one has to take heart at the fact that this is not the best thing to do. This is the last resort. Our investors have to see value in the company. If I am putting my money in this company, I am going to follow my rights, because if I look at the future, the company is worth 1.6 billion and the market cap is at 100 million. The value opportunity, even after the market, even after the rights issue, the enlarged share capital will be 500 million. It's a lot less than the value opportunity to 1.6 billion. So really, I think with a good mind and good facts on the table, this is the rights issue to follow, and this is the rights issue to vote yes on the 19th.
How likely is it that the nightmare scenario that has been suggested by some people, where Lonmin says, okay, after 106 years, sorry, we're not getting a bailout, we're not carrying on, we're talking 37,000 jobs. How likely is it that that could happen?
You know, it's up to the shareholders. We have put the best plan on the table. We have put the best option for them. It's up to the shareholders. Our employees depend on those shareholders. The social commitments we have embarked on and the rebuilding we're doing depends on those shareholders. Saying, is there real value? Is the plan on the table believable? Which I think it is. 10 banks have stress tested that plan. We used a consulting company, SRK, to test that plan as well and really run it. We have run the plan on very prudent price assumptions so that this business can be cash flow positive at best or cash flow neutral at worst in this low price environment. So I really believe the vote has to be yes, because the value potential is massive for them. And therefore, if you were to say, what could be the challenges? It's 38,000 employees. 38,000 employees with an interlinkages of 10 in South Africa. Lonmin today is taking care of 380,000 South Africans. It's close to 500,000 of South Africans. Divide that by 50 million people in South Africa, Lonmin is taking care of that much of people. So it is an important company to keep running. The ground is still there, the ounces are still there. I can say thanks to all my 38,000 colleagues because they are working themselves well. We have produced well, we have our costs coming down. It's a relative game. And when people talk about that, they need to understand that not every company is homogeneous. We have parts that are making lots good money, and those are the parts we're going to continue with. So they should vote yes.
But the question out there in the market is going to be, would Lonmin do it? Would you shut down if there was no other option?
I believe the naivety that 750,000 ounces can just be wiped off the face of the earth is unrealistic, because there are good assets in Lonmin. So there will be somebody who will say, I want this piece and I want that piece. And unfortunately, the journey to get that is our shareholders will have sacrificed their value for others. And I'm saying voting yes ensures that they maintain their value opportunity.
But bearing in mind that there's still an oversupply, there's a drop in the price, there's a drop in the demand for platinum, a lot of people are saying, well, if Lonmin did decide to call it a day, it would sort out some of the demand and supply measures. I mean, but would Lonmin do it?
Chris, the reality is Lonmin is not there for everybody. Lonmin is there for its employees, for its host communities, for its shareholders. That's my purpose. Now, the reality is the whole industry is so indisciplined, and some are not taking out high-cost ounces out of the business. And they should all be doing that. We should all be removing what Lonmin has done, removing 100,000 ounces out of its production, which is high cost. Everybody has got a percentage of those ounces that are not making money. So hoping that this bunch will then move is actually a little bit naive in my sense. But we are focused on doing the right things for Lonmin, for our employees, and for our social partners. And this is the right thing for Lonmin.
Also, looking to the future, I mean, we're talking, you say 500,000, more than 500,000 South Africans are earning a living from Lonmin. I mean, what about if you decide to cut back significantly or even close down? Surely the government is going to have a word and say, well, no, you can't do this. Then what do you do?
The reality is to actually understand, like we are cutting 6,000 jobs. That is actually about saving the majority of the jobs and about preserving the future so that when the future comes, we have a strong and sustainable company that can actually re-employ and grow again. So the reality is not, we have to take short-term sacrifices so that we preserve the long-term opportunities that this company still provides to South Africa, to shareholders, and to our employees.